right? They're gonna report. All right. This Canada guy here. All right. You don't have to, bro. All right, yes, sir. But I mean, you're gonna be here. I guess you could. All right, Canada. We're gonna be going over how I at least approach the fractal model. Just my overall approach in general, real quick. It won't be that long, but essentially, you're gonna use profiles, right, to establish the high of the day to trade away from, right? And then, like for example, I personally like trading manipulation, which is just taking out a low or a high on the hourly time frame, right? Right, I like the low of the data form with manipulation, right? If I play out this other day right here, you see like the same thing, essentially, right? We take out this high over here, right? So just gonna be using these 2 days of examples. So I traded both of these days, right? So once you have an established high that I put in, now it's just about continuation. So now you're trading away from manipulation and you're trading a distribution of the daily range, right? So once this is confirmed, and we can, hold on, let me show you the narrative for this anyways, right? So you have Monday, or you have Friday, last Friday, not last Friday, but 2 weeks ago, took out the short-term low and had this SMT here, right? And then we expanded away. And then coming into Wednesday, I have a clear draw on liquidity of this high right here, because I know we're not going to reverse off of this high, right? So I can clearly draw into this high, right? And so look at the weekly profile for the next day. I look back on what the previous day did, right? It tagged this external here, has a strong closure, right? There's a SMC with the correlated asset. So if you know the Thursday counter weekly profile, right? 3 days of expansion into an objective. So this is generally we can get a new phase of price, and we can frame a reversal off the previous high because we're opening near it. And as long as we have that small opposing run above it, manipulate using this as a reversal point, that would support expansion back into the weekly range. So that's the narrative on the daily time frame for these two trades. Now, let's go see how we could have traded it, right? So when I come to the charts at 8 o'clock or so, right? New York is the easiest session to trade. I recommend trading New York most times, right? Because you can look back on the two sessions and see what they did. Right? It makes it a lot easier, right? So let's go over this day, right? When I come into New York session around 8 o'clock, I see that there's no established low of the day for me to trade away from to our draw. So I need to wait for manipulation of this low, right? And we had CPI this day. So what is this? A candle 2 closure. So as soon as you get this, right? Now the daily profiles aligned. So now I can use really any model I want. I could use the 15-minute model if I wanted to in this distribution. So that's what I'm trying to get you to see is once this is confirmed low of the day, this is when you can look for the fractal model for distribution, right? But I traded it right here, right? I traded the 1 hour, 5 minute, right? Because we have a candle 2 closure. I'll go to the 5 minute here. It's a reversal into expansion candle. So I want to make sure this is an established low. So you see this here, how we create the low of the candle by sweeping out this low. If we get a T-Trade's ideal swing formation, where the candle 3 forms a swing point, but also validates an order block. So that was my entry right here. Right now, I was targeting that high up there. It was like $3 or something. Does that make sense? And inside of all of this, right, you may have, a 15-minute fractal model, right? So you get what I'm saying, right? You see this 15-minute candle closure. You're trading away from the daily manipulation. So this is when you want to look for the fractal model. I don't know if there's a trade here, but let's look. Right, so candle 2 closure right here. We look at candle 3. Is there a CSD already? Yes. Right, so now we just need an intra-candle CSD. And you get it right here, right? You have these two opposing candles, and then we close over here. So this could be your entry right here. Sorry, my computer's like lagging. Hello? Oh my gosh. So that could be an trade right there too, right? But I use the 5 minute, but this is valid because of the low today is put in. So let's go to the next day. Let's look at this example. I just want to see if there's a trade here. But if you're a London session trader, you look back and ask yourself, is there an established high of the day? Right? Yes, we have this manipulation in CSD. Right? We also have this small opposing run. Right? So when price retraces into this key level and whatnot, we actually create SMT right here. Right? So what we have here is an ideal swing formation. You have a candlestick close right here, right? But it clearly just failed. Like there's no setup. It just didn't even create an opposing run here. So there's obviously no intra-candle CSD. But I want to see if there's any setup here. It would be valid. Okay, so here we just open up here, and then I'm not counting this as an order block. I mean, maybe you could count it. I don't think that's CSD though. I don't think it did. No, it didn't. Maybe this here for a continuation, but we need to form a swing point in there. Okay, no, there's no setup, I don't think. Yeah, there's no setup there. But that would be valid, right? Because we have this high today put in. So anything after that, you could trade for continuation, right? But my setup wasn't even the fractal model. It was more of like a setup to like more common to AM setup. But I hope you get the logic here. My setup was this. We had 8:30 news. So if I want to trade a distribution to the draw on liquidity, which is the previous day's low, which is a daily fair value gap, and I wanted to trade away from protected high, right, on the lower time frames, right? Because on the hourly time frame, there's really no high or key level that's in close proximity. It's just expansion candles. So you kind of have to refer to lower time frame protected highs and lows. Right. So that's what we have here. We have 8:30 making a opposing run to the draw, creating S&P, and then you get this standing state delivery. So what this is actually an intra-candle standing state delivery. This is actually how I trade. I trade within candles. So this is a 30-minute candle, right? Where it opens up, creates an opposing run, and it also is confirmed. Its wick is confirmed by the intra-candle chain state delivery. So you can use it like that, and I use it like that a lot. So that was my entry here. Perfect tap to the previous day's low, right down here, right? So I traded both of these days. Another thing to note for this day is we manipulated prior to CPI. When you manipulate prior to a news event, or maybe let's say you manipulate prior to equities open, so 9:30, when it expands away from that, that is a confluence, right? If manipulation happened prior to a news event, it should expand. That's what you want to see. So when it does that, and also validates this manipulation with the chain of state delivery, then that's a a good what do you call it, confluence, right? If you look here, you also get that intra-candle chain of state delivery. Now, I'm not saying you have to do this, but this is actually how I trade. Like, you see how this candle opens up, opens low? I trade candle twos, by the way. I trade the creation of them. When it creates that low, and then that new 8:30 news comes out, validates this as an opposing candle, I would enter this. I wasn't at the market at this time. I wasn't on the market, or at the charts, I mean. But I would enter this because there's no other place for the low of the day to form besides right here, right? And the draw liquidity is super clear, right? So it's just a consolidation, manipulation. Once price manipulates and is validated, right? Also keep in mind that there's S&T right here as well. So it's a really good trade. So you can take this, but it's not technically in the course. So I don't really want to confuse you. But just like here, where you can already anticipate this being a candle two closure. Over here, that's kind of what I did. I'm just not waiting So let me show you, let me play this. So go to the 30-minute chart. You see how this is a candle two closure right here? You see that open high, low close? I'm basically confirming this wick here with that intra-candle chain state delivery, with that SMT, right, inside of a 30-minute key level. So that's how kind of how I use that as well. You can also use a 15-minute model. Like I said, you could totally do that. It's totally valid, right? Because like I said, we're trading away from manipulation. The draw liquidity is not taken yet. So this is where you want to look for like 15-minute, whatever model you like, and you're going to get an opportunity here. Right, there it is, right? You get your intra candle chain state delivery. So really you could have took this too. Does that kind of make sense? How I would approach it? You have opposing candles getting closed over, right? We swept this little high. So it's completely valid to take. And it would have hit the draw. Will make sense in a way. I will go over an example on RTY. I really want to show you this is a really good example. It's from yesterday. So again, trading away from manipulation is like the easiest way to anticipate expansion. So I'm going to show you this here. So here, and when manipulation is combined with a daily profile, it's really good. So if you see this daily candle, right, we have 2 consecutive days of expansion. So we can get that new phase of price, but we can only anticipate that when the daily profile it shows it to us, right? So here we have this opposing candle. So it gets created, this opposing candle gets created on the open of the daily candle. So it opens up, makes a high, and then we just retrace, leaving failure swings, right? So expansion, met with expansion, retracement into this key level. And then we have 930, manipulation. So we're using drivers as a influence, right? Right, so you have 930 here. So this is when you can do what? You can either drop down to the 5-minute here, or you can even do the 15-minute. Because again, this is the only relevant area for the low today form. It's going to be bullish, and it's a driver, right? 930. So 930, right? You get a candle to closure, right? So you can look to trade this move here, and then look at the 4-hour chart here. 6 a.m. 4-hour candle validates this as an order block. So at this point, you have this second entry here that I'm talking about. You have the low that it confirmed, right, with the 15-minute opposing candle. This is a bit riskier, but it's really high probable still, right? Because you don't have an established high of the day on the opposing side of manipulation. That's the whole premise of my model. That's the whole foundation of my model, right? Just basically high resistance to low resistance in the form of daily profiles. But here, 6 a.m. candle validates these series of opposing candles. So if 6 a.m. manipulates, then we can expect 10 a.m. to distribute, right? So 10 a.m. opens here, open low into key levels, right? And gets a candle to close on a 15-minute time frame. This is where you want to catch that 10 a.m. distribution. So it's not like you're just trading a 15-minute candle. You're trading within a 4-hour expansion candle. That's what you're trying to anticipate, right? You're basically catching the low of a 4-hour expansion candle. Does that make sense? And you're trading with a daily profile. So it becomes really high probable. When you look at these two examples here, right? You have 930 making that poison run. Once you close over this series of opposing candles, whenever you have a manipulation, the time driver, even a continuation signature, it's going to make that opposing run. And then once you close over that, very high probable manipulation, an opposing candle. Starts really loud. But here, right, candle to closure, like I said, and you open up that candle and you validate this is an order block. So this is the entry right here. Well, let's do 2R for an example. All right, so if you want to trade again, what are you going to wait for? Another 15-minute candle and a key level. Like I said, this is the anticipating the 10 a.m. low. So 10 a.m. opens here. This makes the low. So open, high, low. Now it's in distribution, right? So here, you're gonna ask yourself, do we have a candle 2 closure? Yes. Do we have a CSD? Yes. So here, it's the same thing over here, where the open validates an order block here. And you can enter that right there. Again, let's just do 2R again. There you go. Does that make sense, kind of? So I'd really study profiles and just trading with the away from manipulation. That's going to be your easiest bet. You look here, maybe. I don't think it's the cleanest day. This is not the cleanest profile either. Like, you have the previous day hitting a key level. So we could expect maybe, it's not bad actually. Like, you have like this CSD here. You have like opposing candles putting price. Actually, not terrible, honestly. Yeah. So if you look inside here, right, for candle 2 closure, right? Because again, we're trading away from the daily open, right? So at this point, it's starting to align bearishly, right? The farther you trade away from the open, right, it's more likely to close in that direction, right? So like this, you also align manipulation with the way candles form. So if you see this manipulation here, it's just creating the daily wick. It's manipulating the daily range, and it also has that small opposing run, which supports expansion, right? So same thing over here, right? So let's look if there's an example here or not. So you can already anticipate this being a win because the candle opens up like this. It opens up right here. I mean, and if it closes below this, I mean, there's your entry, right? That would be valid as an entry candle chain state delivery. And there you go, right? So you know what I mean? We're just trading away from the daily profile essentially. And you don't want to take any you don't want to take any counter trend. Like, you don't want to take this back into the range. Like, just trade away from, manipulation. And basically, if you're trading distribution, so say the day's put in, let's assume it's a high day. Then again, we're looking for key levels to key off of, right? So in this example, you have 2 redistribution levels here. We could say that this is also an opportunity, possibly. Okay, it's really disgusting, but this would be valid, possibly. I don't like, kind of weird it's gapping, but you get the idea, right? Like, that could be possibly valid, but I would never trade this gappy stuff. But yeah, you get it, right? But yeah, that's how I trade it. So let's look at some other examples if I could think of any. I think NQ on like last Friday or something is a pretty good example. Not last Friday, but last week somewhere. Dang, where was that actually? Oh, actually, ES is a pretty good example. It's a pretty good example. So like, you have like 2 opportunities here if you're a London trader. So let's just go over like price delivery here, right? Expansion into a high. We get the phase of price of consolidation, meaning we can't reverse from a consolidation. It has to take out this high. But what we actually form is SMT here. So that is manipulation. And then we get essentially distribution away from that, right? So this would be considered manipulation, right? We get that chain of state delivery. But if you look at the opposing side, again, of this manipulation, what do we have? What do we not have? An established low of the day. Again, it's just failure swings. So it's just manipulation it's just high resistance to low resistance. So you can trade this in anticipation of a high of the day form. I do this all the time. Or you can trade the continuation, basically redistribution, right? So here we form an SMT here. So you can look to trade here off of this fair value gap, and you see it's right here. That's an entry right there. Right, just redistribution, that intra-candle chain state delivery. And also look over here, but I don't think there is. I can't even tell. I can't tell if this is a CSD or not, honestly. But yeah, you could look here technically, right? It's just lower probability. But this is essentially like when I see manipulation with the S&P and I see no established low, right? I'm trading towards that all the time. Just like on that gold trade where I essentially created the manipulation of the daily range. Like I trade that. I like to trade that a lot. I want to check if there was a trade on here, and I'm going to end the stream because it's really loud here. Okay, no, there's not going to be a trade there. I don't think. Maybe there is. No, there's definitely not. It's just too choppy here. I wouldn't trade that. Even though it is an inter-channel change state delivery, but we just nah. That's like equal highs right there. I don't think that's valid. Does that make sense? Right, trade away from manipulation, and then you can trade the continuation essentially. But I also do other things like I trade within like 4 hour expansion candles and all that, but we're not gonna get into that. It's like the scene for here. It's in chart colors. It's literally just this. So on that RTI 1 hour on the 16th, aren't we technically bullish because it hasn't taken a low all the major minor market structures. So on that RTI 1 hour chart on the 16th, aren't we technically bullish? I don't know what you're talking about. Wait, 1 hour chart bullish. Oh, you mean like okay, hold on. You mean like yesterday, right? You mean here? Technically bullish? I would kind of agree. Like, I don't like this profile where Asia's high today, but this is just an example. I mean, when you're this low in the range, if this is going to be a bullish day, right? After expansion, right? After expansion, if it's going to be a continuation, we don't actually retrace to like this deep in the range. Like, look, we're almost taking off this low. So at that point, you can expect this range to fail essentially. It's kind of like AM 7 hour candle where like if like this candle, what is it? I don't even know, the 1 a.m. candle or something. Yeah, like when it closes like this, when it's an expansion candle, it doesn't really make sense for these other candles to come way up here if it's going to continue lower. This is when you look for an open high, look 7 hour candle. That's what you get, right? We're also like inversing this as well and stuff, right? But yeah, I would say like this case, I would anticipate a possible longs in London. But when this fails, really, again, this is the only place for this to really form. Low day, only place for it to form is really here. But once you break that, now we just have a bunch of failure swings at that point. It makes sense, kind of. But I'm gonna end this. Honestly, you don't even have to send me recording because I'm just gonna do another one on Saturday, like way more detailed. You just call it a fail to 1 hour close below EQ. Or just would you call it a fail 1 hour close below EQ? So like, so yeah, if you wanted like the daily chart, like right, like how we view the daily candles, right? If this is going to be a continuation, we'd mark out EQ this range. And yeah, at that point, right, we're literally validating order blocks through the EQ of that range. You know what I'm saying? Which is not what you want to see if you're going to be bullish. Does that make sense? And I think we might even have like 8:30. So yeah, then you have 9:30 again, make an opposing run, and then we're closing over that. So it's actually even higher probability, I would say. This is actually a good trade, honestly. That's your continuation signature at a key time. But yeah, so like once we start to like disrespect the EQ of this range and stuff, and the previous day did hit a key level, right? Like if you go to the daily chart, right, it did hit that key level. That kind of makes sense. Oh yeah, I was gonna do that. Um, it's literally just like what is it again? I think it's just white and black colors. The bodies are just white, black. Everything else is black, like literally. Pretty simple. I don't know why I had it on that. I'm just gonna make it totally bad. So like setup isn't valid for noms. Yeah. Uh, would gold be valid long right now? Oh, in Asia? I don't really look at the markets in Asia, but okay, so my draw liquidity for the week or is actually like these lows. Just because of the way we came back into this range, right, we're actually expanding into the range, so expansion of expansion. The only thing that I could maybe see what y'all talking about. We do have a candle two closure. You could say it's a key level, it's order block and whatnot. And there's really no established high of the day, but it's CPI, so CPI could do something like this, form the high of the week, and then drop. Because I don't view this as expansion. Like, none of this expansion. It's kind of just consolidating in a way. So if we could just run these out, form a protected high of the week, and then drop, that would be ideal. But I see what y'all are looking at, right? We have the chain state delivery, intra-candle chain state delivery. I just don't trade it. I don't really trade I'll call it Asia, to be honest. If it is something like this, if you guys trade London, if it just consolidates in Asia and then manipulates in London, I would trade that. If I would look for SMT here to trade something like that to these highs or something, that's how I would approach it. Just because I would need more confirmation. Yeah, I want those to get taken out for sure. Oh yeah, the background is all white. Yeah. Yeah, I'm probably just gonna end it honestly with this thing. And I'll have a way more detailed explanation Saturday. That's essentially how I do it, bro. That's how you have to approach it if you want high probable trades. I would study profiles. I'll send some stuff to you um, about profiles. Because profiles are really important, bro. So let me just go over some quick examples of profiles I'm talking about here. And then I'll get out of here. Let's just go here. So like for this example, okay, right? Previous expands, right? What do we do after that? We retrace, right? And if you ever look at the opposing side of a retracement, it's Asia session. I never really trust that, right? I don't really care about the CSD. It doesn't mean anything. On lower time frames, all failure swings. So when I drop down to lower time frames and I open up New York session, right? We're basically 9:30 opens here, right? Mix that opposing run to the draw, right? And then we close back over. So this is when I want to look for a continuation lower. Does that make sense? So like even if you're an AM approach type of guy, this is your trade basically, right? 9:30 mix it opposing run, we close over it, validating this as a continuation signature to Asia lows essentially, right? At this point, you probably already have like a 30-minute CSD. Yeah, I have a 30-minute CSD. So now it's just up to the 5-minute and using the time drivers, right? This is where you look for the fractal model essentially. Basically because the high days put in just the daily profile in general, right? Another one, this is like the same thing. This is my favorite, like look here. Like I said, I like to trade manipulation. So when we manipulate the previous high, again, look at the opposing side of manipulation. You have no established high today, right? So I want to trade towards that. And this is where you would look for the fractal model and stuff. Yeah, okay, yeah. Streaming's frozen. Okay, yeah, let's just end it, guys. I'll talk to y'all later, bro. You don't even have to record it, TWX.